What's going on, everybody? Michael and Coco here to do some technical analysis on the financial markets. These videos, we do them Monday through Friday, 5 days a week, and that is to get a good sense as to where the markets might be headed next. In today's video, we're going to be scoping out and then zooming in on two different indices, the S&P 500 and the Nasdaq 100. Let's go ahead and hop right into it. All right, welcome back. We are going to start off first with the S&P 500 index. And what we're looking at right now is the S&P 500 index on the monthly time frame. And we have this pretty nasty pattern here, which I talked about in other videos. But what I really want to point out right now is the bounce point where it bounced from. This blue line that's kind of squiggly through the screen, that is the 5 EMA. And we've been watching that because it's one that really gets tagged very frequently. And as you can notice here and on other indices, we got really overextended from it, moving into a very big line of resistance as well. This is known as an opening or just a megaphone pattern or a widening wedge pattern, whatever you'd like to call it. But we bounced right from that point and we marked that out as a level of support. Now that's important because once we get into the daily time frame, you're going to see why it bounced and where it bounced from. And this is going to help you understand where I'm coming up with these levels of support. So remember, the monthly time frame, it bounced right here. Let's look at the weekly time frame. Here is the weekly time frame, and this week is obviously not completed yet, just like the month isn't completed yet, but we can at least look at the technicals. Look where it bounced from here, from the weekly time frame, this fib level, the 23.6 fib level at 32.58. It held that level as an area of support. So we have support from the 5 EMA on the monthly, support from the fib level as well. So there's clearly a lot of support here. When you look back in the history here, this is where the gap down took place in February before we really started seeing some downwards momentum. So that window here, that level of support really came back and got tested right there, and that fib level. So there's just a lot of confluence with that in that area acting as support. Now this hammer candle that's formed right now, as far as the week is concerned, is a bullish type sign that we might see a bounce up. This current pattern is a falling wedge, but it broke down from, I should say, from a big uptrend. So that is bearish, but we have some bullish things going on as well. The MACD here on the weekly looks like it's about to start crossing over, well above, zero, but it does look like it wants to start heading down. We will find out here as the weeks come. So here's the daily time frame, and we mapped out this little area of support. I was expecting it to more come down to this pink box as low as 3,200, and then I was considering really entering into a long position there. But we saw this bounce right here that we were calling Thor's hammer. That was just obviously a joke. That's not a technical term by any means. This is a hammer candle. It represents a bounce point in the context that it was in. So it pulled back and it bounced up. So it was enough, but it's not enough yet. And what do I mean by it's not enough yet? First off, it showed signs of strength right here. So yesterday's candle with a long wick, it represents buyers stepping into place. And then today we had a gap up and we started to basically just fill that gap and lower. And that was not a good sign for the bulls at all. But the bulls came in at about 32.70 and really started pushing the market back up and closing at a higher level. So we had a 1% positive gain today. There's a couple things that are concerning though. One, where we're running into right now is the 5 EMA as well as the 50 period moving average. Those two moving averages are above, so they should act as a level of resistance. Not only do we have that level, but we also have this trend line right here taking place as well that should probably act as a level of resistance. So we're going to see if this tomorrow potentially we gap up and maybe have an inverted hammer candle and it shows signs of weakness. If we start seeing that, then what this looks like is going to look like a failed bounce, a failed attempt to bounce and move higher. That would be a bad thing for the bulls. However, if the bulls can recapture, I've been saying if they recapture 33.30 and the 50 period moving average and the 5 EMA, that would look like a very good sign for the bulls. And the pattern that this is typically, not typically, but the pattern that's kind of forming right here is a falling wedge. So if you connect from up here and just move it down like that, and then come from here, here. It's a down channel, potentially even a rising wedge, just depending on how you draw it. So a lot of confluence of resistance here on the S&P 500. Still a lot of work for the bulls to do, but they did show up today. They showed some strength, so this is a good sign. Let's go into the 30-minute time frame to look more zoomed in on where these areas of support resistance lie. Sorry, I meant the 2-hour time frame. Then we'll get into the 30-minute, but the 2-hour time frame, I drew out that falling wedge, more of a channel, I would call it, a falling wedge, a channel, whatever you want to call it. And what's good about here is, first off, we came into oversold territory and we started seeing a bounce take place. We have the MACD crossing over, still below zero, but that can represent a trend change. So we have the 200 period that we're going to be trying to run into tomorrow. We have this trend line up here that we're going to try to run into tomorrow. We have the 50 period sloping down that we're going to try to run into tomorrow. And then we have this gap that has yet to be filled on the 2-hour time frame as well. So this area right here is just a lot of confluence as well of resistance on the 2-hour time frame. If we start breaking above and capturing these levels, that is what's going to give the bulls more force to the upside. Otherwise, if we don't do it, this could just be a big fake out bounce till we potentially head lower. So we will see. Now, keep in mind the context of this week. This week is very important. We have the Fed speaking 3 times, or Jerome Powell and the Treasury Secretary, Mnuchin, or I can't pronounce his name. He's speaking as well. I believe that they spoke in front of Congress today. And then we have, I believe we have our first presidential debate coming into next week too. So there's going to be a lot of things taking place this week. Maybe we might get stimulus. There's a lot of just things that are out there that can really send us up higher. So if we start seeing a breakout, I mean, that might be the exact time when news starts coming out about a stimulus package, and then it sends it up higher. So we got to play it day by day. If you don't follow me on Twitter, I like sending out intraday alerts. Same on my Instagram on occasion too as well. So if you don't follow me there, follow me right here. It shows my Twitter handle and my Instagram handle right below me actually. All right, let's go to the 30-minute time frame. So here is the 30-minute time frame. We have a gap that has yet to be filled up here from 33.75 up to a 33.85. We have the 200 period sloping down. We have this area of resistance right above it. Now our RSI indicator is nice and bullish. We're moving to the upside direction, so that's good. Our MACD is bullish, so that's good. We have nice support down here, and we recaptured the 50 period moving average. So one thing that I want to point out is where today's candle kind of got rejected at. This last 30-minute candle right here, that was at 33.20, and that was where this gap of today gapped down. So we gapped way down today, started moving lower, a lot of scare, and then we found support right around 32.30 and then started moving up. We filled today's gap. Will we come in to fill this gap as well? Well, in order to make it all the way up there, I will say that would send this RSI, I would say, clear into overbought territory. So I don't think it's going to make it up there in one fell swoop without some significant action. So what we might see, if we see a gap up, 33.30 level should act as an area of support. So if we gap up and we pull back to that range, or potentially even if we open within this channel and then break above, we might come to back test it, and that could represent a good buy the dip or buy the little miniature pullback right here and have a tight stop loss. That would be a good risk versus reward trade. And then you would probably sell off shares when you get a little bit higher. Definitely take profits if you're coming into this gap and the 200 period overhead. So if you want to pull this chart up, the link is going to be in the description, and you could kind of see these levels, 3250, 3280, 3300 is a big level as well. Clearly the bulls have some work to do to reset where they're kind of heading and reset this trend. So we will watch this one as well. One last thing is the context of what's taking place on this time frame is bearish. So look at the 50 period sloping down. Yes, we recaptured it, but keep in mind it's still sloping down. So the trade right now is bullish. However, the trend is bearish. In order to change the trend, you must change the trade multiple times. Now the 200 is still way above the 50, and it's also sloping down. So bearish context, bullish trades. We'll see how this one plays out. Here is the VIX, the Volatility Index for the S&P 500. Saw a little bit of a downdraft today, down 3.31%. It's moving a little bit lower. It recently did break out of what you can call a bull flag right here. So it's going to be interesting to see what takes place. Now, if I zoomed in on closer time frames, there's still a lot of air pockets that need to be filled, including this one right down here. So we're going to monitor this one closely. If we start seeing moves higher and this pick up pace, we'll probably see downdrafts in the S&P 500. So what I'm thinking is if we get more continuation, because the bulls look like they have a little bit of control right here, but they're kind of like they have control in bearish context. So they got control, it's bearish context, we'll see what takes place. But if they have a little bit more pressure to the upside, up into bigger levels of resistance, we might be seeing this downdraft a little bit more here, and then we might be setting ourselves up for some potentially good short positions within the S&P 500. However, if we start seeing a real big spike here before filling these gaps or before coming down anymore, that's going to send the S&P 500 down lower, potentially right into that 3,200 level, which I've been saying I'll be taking on a little bit bigger of a position right at around there to see what takes place. But we got to play it day by day. That's just how it goes. But we are watching this, and we'll come back to it tomorrow as well. All right, so this is the Nasdaq 100 on the monthly time frame. This should look familiar. I'm not going to spend too much time here because I'm trying to keep this video a little bit shorter, and I'm already running kind of late here. But this right here is some dark cloud coverage taking place on the monthly time frame. It was much lower, which would have been a Western outside trading day or a full bearish engulfing, and it could potentially head lower. So keep in mind where it bounced as well. We bounced at this level, which was the 5 EMA. As you can see, when I put it back on the screen, it bounced perfectly right from that level. Now we do have some more downwards pressure, but we will be monitoring this. The RSI indicator is overbought. It's actually just kind of crossing in a little bit lower, but we'll see how this happens. Typically, it was overextended from the 5 EMA, so it retraced to touch it. It's one of those moving averages that are frequently tapped on, and we clearly went to touch it just recently. So we'll see how far this bounce can go, or if we continue to be more overextended. On the weekly time frame, we just recaptured back this 23.6 fib level. That's a good thing for the bulls. We did, however, break out of this channel, so we have some bearish things taking place in all the indices. We broke out of the resistance on the S&P 500. We broke out of this channel, which is bearish, but now, there's a couple bullish things taking place too. We recaptured this level, and this is a falling wedge type pattern. So if we get a continuation to the upside, it might bring us in up more towards around 11,800, which I'll talk about that level here on the next time frame. So here it is on the daily time frame. You can see the falling wedge type pattern that's taking place, and keep in mind the confluence of the resistance right up ahead. We have the 50 period. We did recapture the 5, so that's a good sign, but we're still below the 50, and we're still below the upper trend line of this falling wedge. So will we see a breakout? And if we do, where can it potentially go to? Well, let's look at the 2-hour time frame to kind of map that out. All right, so here is the Nasdaq 100 on the 2-hour time frame. And what I want to point out here is we're moving to the top of this channel. Potentially we might break out of it, but there's a lot of resistance overhead. When there's a lot of resistance overhead, sometimes in the futures market, they don't even want to test it, so it just gaps over the next day on the SPX, or on the NDX, sorry. So we'll see what takes place in the futures market tonight, but because of all this overhead resistance, one, we have the 200 period. We have the gap, that gray box is the gap. Then we have the top of the channel trend line is resistance. Then we have the 50 period moving average, that's resistance. So we have a lot of resistance kind of building up right here at this level, so we might get rejected and start to head lower throughout the remainder of the week. Now, what could send us higher? Well, we've mentioned that there's a lot of news that can potentially take place this week with Jerome Powell speaking multiple times, and multiple people from the Fed are going to be coming out and talking as well. We don't know if we have a stimulus package coming out this week on top of all of that. So if we start seeing a breakout, that could very well be the sign that some good news is kind of brewing for the stock market. Now, as far as resistance goes, it would be right around 11,750 to 11,850, and that's where I would say would make sense, and it would send the RSI back into overbought territory, which could potentially be a good area for going reconsidering a short position. But we will see. That is the levels that I'm looking at on the Nasdaq 100. The banking index continues to move lower. We're down 6% on the week. We broke out of this trend line. That is not a good sign. This is the BKX, the KBW Bank Index. It's the largest 25 institutions kind of compiled within the Nasdaq here. So this I have been monitoring and tracking because more downwards pressure does not it just shows how the economy is right now, and this is not a good sign for the overall economy when we start to see bank index start to move lower like this. So we're going to monitor this one also very closely and kind of see in comparison what takes place with the Nasdaq. So we clearly have some sectors moving up in the Nasdaq, but yet the banking sector is taking a big hit, and I feel like that's going to be a drag on the stock market in the near future. So we'll monitor this, including European banks, which I don't really bring up charts of those, but European banks as well have been getting just completely annihilated. So keep an eye on the financials. Won't spend too much time here. This is the Dow Jones. We broke out of this channel. We kind of created a hammer candle here, saw a little bit of a bump up today, but nothing really that says much. We're still below the 50, still below the 5 EMA, and we gained 140 points today, but yesterday we swung almost 1,000 points from the opening to the low. So it's a lot of volatility yesterday, and really we just had a sideways candle today, and it still has a lot of confluence resistance up ahead, and it doesn't look good for having it break down from this. So once again, we got to see what takes place and monitor this, but as I see it right now, this doesn't look like a good buy the dip moment. Maybe potentially if it heads lower into this 200 period moving average, but we're going to monitor this one too as well day by day to see what takes place here in the near future. All right, so here's the US dollar on the daily time frame, and we got above the 50 period moving average, and this is just a perfect technical breakout right here, and we've been talking about it looks like it's going to go higher, and well, we broke out of the channel, a perfect channel, and we kind of just tracked sideways, and we had the positive divergences on the RSI and the MACD, and then we started seeing an uptick. Now this is going to apply pressure on equities. It's going to apply pressure on gold and silver and other commodities. So you see gold, I'm not going to be doing the technical analysis on gold or silver today, just to keep this video, try to keep it shorter. I'll get back on that tomorrow, but they're sticking around that same exact price, and they're looking pretty weak, like it looks like it wants to start rolling over. But the dollar has work to do, okay? The dollar has to get above certain levels. Now, I was saying if it gets above 94, which it did, it closed above 94, hardly 94.02. That is a good sign for bullish momentum to the upside. Now, 94.63, where it tapped over here, that's going to act as an area of resistance. This is really going to start moving and showing strength if we get above 96. 96 to 96.41, that level right there, if we get above that, I mean, I can see the equities market down potentially another 5-10% from where they currently stand. So we got to monitor this one because the dollar, it's very important to watch what takes place here. And very interestingly enough, today we saw the dollar go up, but we saw almost everything go up. We were seeing gold go up intraday and silver go up, and we were seeing rallies in equities. And so it just somebody posted on my Twitter, what's going on here, and my response is, well, somebody's going to be wrong. So one of those trades is going to be wrong, and that's just what happened. So we will see what takes place. Is the dollar bulls right here wrong, or is the equities wrong? We will see. If we start seeing a rise continuation of this breakout of this channel and this bull flag right here, well, then I think that the equities market is going to feel some pain here in the near future, as well as gold and silver. All right. That is all I have for you on today's market brief. We covered multiple levels. We scoped out and zoomed in. Keep in mind, and I noted this as a lesson on my Twitter, so follow me on Twitter if you don't, but the lesson in these markets and all this uncertainty that's taking place, especially this week, is don't always believe breakouts. And what I mean by that is when you're trading or investing and you see, a good breakout, a good opportunity, make sure you're very cautious on your trading position and your trading size. And it's very important because could be a lot of whipsaws that take place in these environments. If you go short at a perfect area and everything lines up, but yet they come out with news about stimulus, you might just get blasted on that position very quickly. And if you don't have stop losses in place, or you think it's going to come back, you can get stuck in these positions and potentially lose a lot more than you ever wanted to. So be very nimble, be very cautious, and be very open to the idea that, hey, if you get stopped out and you lose some money, that's a good thing, because there'll be better positions and you'll see other opportunities non-stop in the market. It's not going to end. So if you feel that kind of anxiousness that you should or shouldn't, or you question certain trades, you just step back from everything and maybe hold off until you have some more clarity in these markets. So that's all I have for you today. I will see you back tomorrow.